Good morning, traders. Richard here, a quick Ichimoku cloud chart market review of the QQQ ETF. From an Ichimoku cloud chart perspective, fantastic rally after rebounding from this cluster of cloud chart support levels. There were plenty of buy signals here. We got that standard line and turning line rebound there. Then we got the Ichimoku cloud chart cross buy signal there. We got the cloud cross buy signal there, and a rebound from the top end of the standard line, or the turning line of Ichimoku cloud. Now we reached our first upside target 519, which is this resistance zone. The next one after this is 528, getting close to that, and then 533 is the upside targets. Now we are moving a little bit sideways here as the market's struggling with quite a lot of overhang. You can see this entire base here, December, January, February, there's lots of resistance to get past. So the market's going to really have to pull out a few rabbits out of the hat to get past these levels and then get to the 540 upside target. Now, there is consolidation risk back down to test this 503 cloud chart support level. This old resistance level that we managed to break past and then rebound from can be tested again if we get a weaker June with a rally in July. So we could see a further consolidation. Maybe the market's going to come back and retest this 503 zone. By that time, the standard line of the Ichimoku cloud would have caught up, as well as these Fibonacci moving averages at that zone. So 503 would be a major support zone, as long as the standard line of the cloud at 494 can catch up to that level. So that can be a nice significant area to swing trade a rebound rally from that support zone. So keep an eye on 503. If these levels fail, then the next level of support is the top end of the cloud, as well as this top end cloud charts level there, and then we have another 464. But we'll get plenty of sell signals to get to that zone. In terms of the 4-hour Ichimoku, more from intraday perspective, let me just resize that, get more data on the screen. There we go. Yeah, we can see that cloud chart rebound from that cluster of support, and then we had plenty of buy signals in and around the standard line and the turning line of the Ichimoku cloud. Then a beautiful cloud chart cross buy signal. And then we had a nice strong rally up, gap past the 503 resistance zone, came briefly back to test that, as well as the top end of the front end of the cloud. And you can see now how the standard line and the turning line is fighting there for support there. The QQQ is fighting for support there just above the standard line of the Ichimoku cloud. And we can see the upside resistance targets. So 528, 533, and 540 is the upside targets when we break out of this sideways consolidation range. Watch out for potential pullback to test the top end of the cloud for support, so we could see any kind of rebound from this area as well, and then a stronger attack later on in the end of June, closer to options expiration date, to try and get through that resistance. But a significant resistance, 528, 533, and 540, so it's going to take quite a lot of doing to get past that zone. Let's take a look at the weekly Ichimoku. There you can see we've got that gap there. Can expect that gap to close over the next couple of months, so there's downside risk. The line in the sand on the weekly is this bottom end cloud chart level there. If the market dips below this zone, we're back in bearish territory, but so far so good. Back above the cloud, very strong rebound rally from cloud chart support levels. Just the risk that we might close that gap at some point on the weekly Ichimoku cloud, so that's the downside risk. But you can also see where the upside resistance come from. That 540 there, 533 and 528 is a upside resistance level. The concern I've got on the daily is we're a little bit extended from the top end of the cloud. If we look at the price action where we are now and this top end of the cloud here, so that is quite wide, so we can expect a kind of a mean reversion take place. So there is significant downside risk at these levels if this resistance level holds. Now, where can we pull back to? If we look at a Fibonacci retracement from this low here, let me just sorry, I can't see that low there. Just move that to there, and then we'll do the Fibonacci retracement. So from that move there to that high there, we can see now a 23.6 Fibonacci retracement would be around about where the standard line of the Ichimoku cloud can level out, just below the 503. So that's a significant support zone. So that's the downside risk targets in the current rally. If this resistance level holds to the upside, we could see these levels being tested, and a 38.2% retracement will bring you right above the top end of this level of the cloud. So keep those downside risk targets in mind. But for now, keep a very close eye on this turning line of the Ichimoku cloud. Is that going to be support? And if we slice below that level, the next downside target would be 503. But so far, the swing trade potential is from these levels up to 526, 528, 533, and 540. These are the upside targets if we get a breakout out of this tight consolidating range. But keep a close eye for price action. And the minute we start trading below this turning line of the Ichimoku cloud, there is risk that we could test the 503 and then the 23,497 Fibonacci retracement on that zone. Thanks for watching. Until next time, happy Ichimoku cloud chart trading. Bye for now.